Milo, thanks for joining us today. I think it's always interesting talking to property players and specifically guys who are involved in the residential real estate sector. You've held various roles both within listed and unlisted property funds, specifically within the residential segment. But for me personally, what's more exciting is your current role as CEO of the South African Multifamily Residential Rental Association. Perhaps to start off, we can go with what is the sector of the market and maybe some thoughts about or from where your key constituents and what they think about the sector.
Yeah, thanks, Loyiso, and thank you to RMB again for hosting me today. I think before we dive into multifamily specifically, I think it's to look at the residential market as a whole and to understand that that consists of both home ownership or for sale market and also a rental market, of which multifamily is a segment. In South Africa, historically, I think we've had this inconsistency of terms or definitions. And as SAMRRA, one of our big aims and purposes has been to adopt a definition, which is a US-based definition, multifamily, and effectively coin the phrase in a South African context. So simplistically, what multifamily means is that it's large-scale, single landlord owned and operated residential complexes for rental only. And when drawing that back to our member base and understanding who we've attracted into the association, I think we very much have a wide variety of members who offer rental stock across all segments of the market, but institutional grade rental stock. When bringing it back to a price point specifically, naturally we land in the low to middle income market. And what that means is rentals are between 5 to 12,000 Rand per month, but this being the biggest segment of the market and the best performing segment of the market as well.
That's interesting. I think that's where RMB has really done well, where we've partnered and grown with our client sets and provided sort of differentiated solutions in the segment of the market. Perhaps next we can touch on where South Africa finds itself. I think globally, the segment of the market has grown and is continuing to grow. We, compared to our global peers, are probably at the infancy of that growth. So maybe as a next question, can you go into what needs to change within a South African context to catch up to our global peers, and maybe where we find ourselves in our growth phase now?
So, agreed. I think South Africa is very much in its infancy. We're starting out. And when you benchmark us to global markets, we talk about the 2 and 20 rule. The 2 being the fact that listed or institutional capital in the real estate sector is only exposed to about 2% of multifamily residential, where in global, more established and mature markets, that's well north of 20%. I think going back to historically what South Africa has also offered in terms of residential, it has always been a homeowner market, but we are seeing shifts where rental housing and where rental demand is becoming an imperative. And when looking at the drivers of that shift, you can attribute it very much to the housing gap that exists in the market at the moment, to the constant influx of people wanting to move closer to places of work, coupled with the fact that tenants or homeowners haven't always had access to finance in order to own their own homes. Another interesting trend, which is also coming through at the moment, is this change from tenants where they're not renting because they have to rent because they can't afford to own a home, but where they're renting because they want to rent.
I think it's an exciting time for investors as well, and that's why we've seen an influx of capital into the space. A key determinant of capital allocation is sort of risk-adjusted returns. I think the attractiveness of the residential market speaks for itself. It's outperformed most subsegments of the property market, with the exception of industrial assets. So maybe from your perspective, what do you think investors find particularly attractive about this segment of the market, and why they're allocating capital to residential assets?
I think you touched on a very important point there. And what is interesting is that there is now empirical data that supports performance. So you look at MSCI and what they've done recently and published around residential performance. And yes, we are starting to see that residential is outperforming other property subsets. But I think it's also to unpack the different components of risk and return. And with residential specifically, there's been this misconception around risk and that it's a high risk asset class, but we've seen anything but that. It's actually well diversified, it is counter cyclical, and it actually has low volatility. When looking at it from a return perspective, it delivers on consistent, stable returns, but where portfolios actually have a very, very strong value underpin. So in terms of capital allocation and capital providers, it starts to make a really nice match between patient capital and long dated, long term sustainable returns and investment opportunity.
I think we've seen it from our client set where we've partnered with key players who have the ability and capability really to operate these quality assets. In closing, maybe we can touch on where South Africa finds itself. I think we at an exciting time where property technology, specifically within the residential market, is growing. Clients are bringing differentiated products into the market. If you look at the office to residential conversion, it's actually quite exciting. Maybe your view on the next 10 years and where the property market will be in 10 years' time.
So agreed. I think we are starting to see innovation in the space, but when looking at status quo in the current landscape, firstly, as I mentioned, there is the housing gap, and that in itself is the opportunity to grow this asset class and this sector of the real estate market. What we are seeing is more significant and larger capital inflows into the space and support from institutional and pension fund investors. So that's obviously really, really exciting. But looking forward, and again, I draw this parallel back to the SAMRRA member base, where we consist of effectively 15 members that represent and make up, call it 80-odd thousand units or apartments, consisting of about 50 billion rands worth of asset value. We need another 15 operators in the space. We need more capital to flow in where we can start seeing businesses grow and we start to scale up this asset class and this segment of the market.